what we expect will be some additional legislation coming out. But first and foremost, I just want to let you all know that we are really focused and have been focused specifically on advocating for self-employed, independent contractors and small business relief in every emergency response package that we've seen thus far, phases 1, 2, and 3, and we'll continue to do that for future phases for as long as this pandemic lasts. Additionally, and as part of that, we are in constant contact with our industry partners and affiliates at the federal level to ensure that we are really fighting this battle on a united front, attacking it from multiple angles, and doing everything that we can to protect the real estate industry and to minimize transaction disruptions during this time. So first off, I want to point you towards our website. If you've not checked it out thus far, please spend some time there. We've got a great resource page at nar.realtor/coronavirus. Of course, you can go directly to the homepage and just search coronavirus and find that page. Variety of resources there, great information, summaries of legislation and its impacts on the real estate industry. But there's more to it than just the advocacy front. As a member association, we're doing a variety of things to help our realtors across the country during this time. And so there's more information there as well on that page. And just to speak to that, I would be remiss if I did not mention that we have recently essentially relaunched a program that was first initiated back in the 2008 crisis. The program's called Right Tools Right Now. Again, more information online. You can certainly find it there. There's actually a link from our homepage directly to the Right Tools Right Now page. And this program makes new and existing NAR products and services available for free or at a significant discount to members. So again, you can learn more there. I can urge you to continue to check back on that because we are continuing, that program is continuing to evolve as we get deeper into this pandemic. There are tools and programs and initiatives that are there currently at free or reduced price, and we anticipate there will be more down the road. One piece of that I do want to make sure that I mention or highlight here today is a new program that we've launched recently in the last few weeks, which is our telehealth services. So given the situation that we're in and that most folks have stay-at-home orders, and obviously it's certainly safer to be at home and not head out to a doctor's appointment that may not be urgent. I urge you to take advantage of the telehealth services if you need them. So again, there's a link on our homepage. Check those out. What we're offering essentially through that program is 2 free months of these services if you register online. So go to our homepage, snag that link, read a little about it, and if it's something that you know could be useful to you, go ahead and sign up. And if you sign up before the end of May, you get the first 2 months for free, and then the remainder of the service is provided at a subsidized rate. So I think it's about $7 or $8 a month from that point forward. So very affordable. In addition to Right Tools Right Now, we have also repurposed our hotline. So that number is 1-800-874-6500. And that's available now for members to call and really get their questions answered on anything and everything coronavirus related. So if there's a question that you can't find information on our website on, or just don't have time to look, call that number and I assure you that you will either get an answer or get pointed in the right direction. With that said, I'm going to pause because I think we want to get to the meat of this presentation. Again, as I mentioned earlier, I'm thrilled to have one of our policy experts here with me today to really take a deeper dive into the CARES Act, the Phase 3 legislation that passed just a few weeks ago that really has a multitude of provisions in it to protect the real estate industry. So at this point, I want to kick it over to Megan Booth. Megan?
Good afternoon, everybody. Thank you for having me. I'm going to try and share my screen and show you some a little PowerPoint that I put together that I'm going to sort of whip through this because I'm going to assume that you, that most of you have already know most of the basics from this. Can y'all give me a thumbs up? Can you see my screen? Okay, perfect. Okay, so Drew just mentioned that we have these great FAQs on our website, and they are updated literally on a daily basis. We are getting more and more information about everything that I'm going to be talking about. One thing to keep in mind, you know, this massive legislation was only passed about 3.5 weeks ago, and it's taken a while for everybody to figure out how to create these brand new programs and how to make everything work. So lots of new information coming out. So I encourage you to check back at our FAQs all the time, because we literally are updating them with new answers and questions every single day. Okay, so real quickly, I'm just going to go over essential services. I don't know if Pennsylvania has declared you all essential services or not. The federal government did. Nope. All right. We're saying no. So the federal government did say that real estate services are essential, but every governor has control over that. So I will also point out some people would say essential is good and essential is bad. In some states, people are concerned that being essential means you're not eligible for unemployment or other loans. The good news is that's not true. So doesn't really matter either way. You can still get access to the services. Individuals, starting this week, the IRS is mailing out or depositing checks to people who can get or are going to get an actual cash check from the government. They're starting, I think it's today. And if you have, they're basing it on your 2019 tax return or your 2018 tax return if you had not yet filed, because those deadlines were extended to July. If you haven't filed, or even if you owe money, you don't owe it until July 15th. So that is great. People who are making less than $75,000 filing singly or 150 filing jointly will get a check. You can also take early withdrawals from retirement accounts without penalties if you need to access cash. An important thing to note is that you will not get a call from the IRS. They will not call you and ask you for any information. That is not what they do. That is a big scam, and it's happening quite a bit right now. So please do not respond to that. There is a website. If you go on our FAQs, there's a website now you can go on to input additional information if you want to. So for example, if you got a refund last year and it came in a check, but you'd prefer this money to be a direct deposit, there is a site on the IRS website. Only go to irs.gov, but there's a place you can do that to update your information. If you're a homeowner and you have a government-backed mortgage, and that's a very liberal definition of government-backed mortgage, that includes FHA, VA, rural housing, Fannie Mae, and Freddie Mac, you can request up to a full year of forbearance. But I will tell you that, as President Vince Malta says, forbearance is not forgiveness. You still owe that money. So you need to call your servicer to request it, and B, you want to try and work out a repayment plan. You do not want to owe a year's worth of mortgage payments on the 361st day. So you want to ask for a repayment plan if you cannot pay your mortgage. If you are a renter in a property that has an FHA, VA, or FHA, rural housing, Fannie or Freddie loan, you can request relief from eviction for 120 days. Again, this is not forgiveness of the rent payment. It is relief from eviction. You cannot be evicted, but you still owe that money. You need to call your landlord to request it, and you will need to come up with a repayment plan to pay that money back. Many landlords are also eligible for forbearance. Unfortunately, not as generous as what the tenants get, which is something we are working to remedy. It's not fair for tenants to get relief that the housing providers do not also get, because how do they pay their mortgages? So if you're a landlord who has a federally connected mortgage, you can get up to 90 days forbearance if you call your servicer. That's in 30-day increments that can be repeated twice, so 90 days total. Again, we are working with Congress to try and remedy that, to make sure that housing providers and their residents get the same. I will say that only about 50% of the multifamily portfolio has one of these federally connected mortgages. We do know that the other 50%, in many of those communities, there is also a prohibition of eviction, or the landlord-tenant courts are closed. We are also trying to look for relief for those landlords. Many of those property owners may be eligible for some of the SBA programs that I'm going to talk about. Can our members still sell homes? Yes, they can. There's a great doc on NAR.Realtor about how to appropriately sell homes during COVID-19. And there's also a great little video from Mabel Guzman, NAR's Vice President for Association Affairs. She's been doing virtual showings for many years. So she has a really good example for realtors on how to do that. We're starting to see a lot of issues, and I was not privy to your discussion with Dr. Yoon, but we're starting to see a lot of issues with the ability to close loans, even for people who are already qualified. To think about it from a lender's perspective, a lot of lenders are wary to close a home loan today on a borrower who tomorrow can ask for a year to not pay for a year. So that's why we're hearing a lot of lenders stopping closings or asking for significant more documentation at the very end. I will say that Freddie Mac, Fannie Mae, FHA, Rural Housing, VA, none of them have changed their requirements, but a lot of the lenders we are aware are changing those. Same thing with verification of employment. All of the federal loan programs have actually expanded their methods on how you can verify employment. You can do oral employment, oral verification. You can do an email verification. You can show a pay stub in the last 30 days. There's lots of ways that they can do it. I will tell you most lenders are doing more than that because they're nervous to make sure that people are still employed. Same with appraisals. Any mortgage that's touched by a government program at all has released guidance to allow for external appraisals, and most will allow for desktop appraisals, some even using MLS data, but not all lenders are accepting those. E-closings is the other thing. It's how do you do an e-closing? A number of states allow for remote notary. We are also working on federal legislation to try and get remote notary in every state. Let me go back to that one for one more second. So to what I said about the crunch for credit. So we do think a lot of lenders are stopping making home loans, basically stopping outright. I know JP Morgan over the weekend pulled out completely. A number of other lenders are saying only if you're over a 700 credit score and only if you have 4 months reserves and kind of crazy things. We're hoping, I think this is going to get worse in the short term, but hopefully better shortly thereafter. So Ginnie Mae, who securitizes FHA, VA, and rural housing loans, has announced a liquidity facility for servicers. And so the idea is the reason why servicers don't want to close the loans is because they're afraid you'll go into forbearance the next day. This liquidity facility that Ginnie Mae is setting up would let those servicers get a loan to pay their investors for the mortgage that it goes into foreclosure. That should help ease FHA, VA, and rural housing. We are pushing the director of the FHFA, Mark Calabria, who controls Fannie Mae and Freddie Mac, to do the same. He has so far been resistant, but he is getting a lot more pressure every single day. And so we're hopeful that something will come to pass there, which will ease some of these restrictions we've seen in the lending community. All right, so what other kind of relief can our members get? The first one is pandemic unemployment assistance. I don't know where Pennsylvania is in this waterfall, but I will tell you that it's taking a lot of states to get up to speed. Again, this legislation passed 3 weeks ago, blindsided many agencies, and every unemployment assistance program is administered by their state. So Department of Labor has put out some guidance to the states on how to do this, how to make independent contractors eligible for a program that they traditionally have not been eligible for. And it's just going to take a little bit for the states to all get up to speed on how to do it. So I know that's not the easiest program. We do know states that are already up to speed and are doing it. If your state isn't doing it yet, it's just going to be a waiting game. The good news is you can get up to 39 weeks of assistance through December. And for 8 weeks, you can get an extra $600 through the federal government, regardless of what the calculation is in your state, $600 a week. Okay, the SBA programs. Let me start off by, at the end of this, I'm going to tell you not to worry. But for now, I'm going to caveat all the SBA programs we're saying. You're all hearing the SBA is running out of money. Yes, that is absolutely true. In fact, I just got an alert about 15 minutes ago that they are going to run out today. That does not mean people should not apply. They should keep applying. Apply, 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 apply. There is a bill that could be passed as early as tomorrow to provide more funding, and I'll go into that a little bit more at the end. So right now, we're just going to pretend that they have plenty of funding while I do this part, and then I'll talk more about it at the end. Okay, the first program is the Economic Injury Disaster Loan Program. The good thing about the Economic Injury Disaster Loan Program is it is run through the SBA. So when you hear your members say, I can't find a lender, You don't need a lender for that, for the EIDL program. It is run through the SBA. So you go directly to the SBA's website, you apply directly through the SBA website, you get your money directly through the SBA. Now, the original legislation said you would get your money within 3 business days of applying. That is nowhere near happening. I don't know a single person who's gotten it within 3 business days. But I do know of quite a few realtors who have been successful in getting an EIDL loan. So people should apply. Here's some links on how people can apply for the loan. This is a loan that will cover payroll, fixed debts, accounts payable, any other expenses that cannot be paid because of the impact of the disaster. You can get a cash advance of up to $1,000 per employee, up to $10,000 that will not need to be paid back if you can verify that you used it for payroll. There are no payments for the first 12 months on this loan, and the interest rate is 3.75. So I encourage people to apply for this loan. It is much easier than the second loan that I'm going to talk about, which is the Payroll Protection Program. The Payroll Protection Program loan is also, our members are also eligible for. It is run through private lenders. So if you have members, which I know there are quite a few, who do not already have an existing business account with a lender who provides SBA loans, I will tell you right now, it's going to be a struggle. If you can understand from a business perspective, if you're a bank, you're going to serve your existing customers first. And that's what they've all been doing. So all we say is, my colleague says that the Payroll Protection Plan, PPP, stands for patience, persistence, and preparedness. So prepare all your documents and then call around until you find someone who will take your application. So again, there's a link here on how you can find a lender. These can be used for payroll expenses, including benefits, mortgage interest, rent, utilities, and interest on any debt that you already had before February 15th. You can get up to 2.5 times your average monthly payroll, and there are no payments for the first 6 months with a fixed interest rate of 1%. There is also forgiveness through this loan program. So it's a great program. It's a little more challenging to get a loan under the PPP program. But again, I know people that have successfully gotten a PPP loan in the last few days. Can you get an EIDL loan and a PPP loan? The answer is yes. You cannot use them for the same thing. You basically can't double dip. You could, in fact, depending on how your business is structured, you could theoretically apply for unemployment insurance, an EIDL loan, and a PPP loan. Again, as long as you're not using them for the same thing. So you can't get unemployment for yourself, then pay yourself with a PPP, then pay yourself with an EIDL. That would not work. You will probably go to jail if you try that. So, but you can apply for more than one loan as long as they're for different purposes. And the amount of forgiveness you'll get will differ if you've done that. You're getting a sneak preview at a cool chart that we are going to have on our website within the next 48 hours, I hope, that sort of goes through the differences between the different loan programs. Hopefully we will have that up on our website, like I said, within 48 hours. So this is the best place to find out all your SBA questions and answers. We literally are updating this around the clock. An update went out at 10 p.m. last night. An update's already gone out again today. We are updating this one constantly as the SBA puts out more information. So if you don't find your answer to your question, please send it to Drew or to me and we can help you find that answer, but keep going back. We are updating it consistently. I don't want to leave out our commercial members, so a couple quick things. Great news in the last couple days with 1031 like-kind exchanges and qualified opportunity zone funds. We were just able to, we've been lobbying the Treasury since the get-go on this, and they just came out this week with an extension for both the deadlines within the 1031 and the qualified opportunity zone fund investments that you now have until July 15th for all of the deadlines under that program. For our property managers, IREM has a great guide on their website, a pandemic guide for property managers on the IREM website. It's currently free for members, non-members, anybody. So go to their website to check that out. They also have a whole bunch of little videos about different property management issues during this time that are great. There were a couple things in the CARES Act that are also beneficial to commercial members. Businesses are able to write off immediately the cost of making internal improvements to certain types of real estate, including restaurants and retail stores and others. So instead of having to depreciate them over the normal life, the 39-year life of the building, they can file for an immediate refund, and they could even amend their taxes for 2018 to get an immediate refund on that. The CARES Act also allows provisions for businesses to offset tax losses. So you can carry back net operating losses from 2018, 2019, and 2020 against profitable years for up to 5 years. So again, you could do an amended return for 2018 and you could get cash right now. We also think many commercial property owners could be eligible for the SBA loans. All right, so what is next? We, every day, as I said, are getting more information from the Department of Labor and from SBA, and we are updating that information as soon as we get it. The biggest thing is the funding for these programs. So the Senate could vote as early as tomorrow on additional funding for these programs. We feel it's a hugely bipartisan effort to get more funding for these programs because they were so heavily subscribed in the first 2 weeks before a lot of our members could even apply. They could only start applying last Friday if you were an independent contractor for the SBA. So we are hopeful that we're going to get more money for that, and hopefully it will be very quickly. So people should not stop applying. People should still submit their applications, and hopefully that program will quickly be refunded, like by this weekend, hopefully. So we are going with that they're going to, it's a very bipartisan effort to provide more money. Also, the Congress is basically calling that like phase 3.2. So it's sort of technical corrections to phase 3. Phase 4 will be a whole new set of relief programs. We are hoping to get federal remote notary. Also, because of what I talked about, forbearance is not forgiveness. We think there's a lot of people that are going to need some help staying in their home throughout this crisis and in the immediate aftermath. So we think we need increased funding for housing counseling. We're trying to get relief for housing providers, for landlords, so that they get some way to pay their mortgage and to pay their investors when their tenants may not be paying rent. And that applies to both multifamily properties and commercial and retail properties. And we're always looking for more things. So we have a whole list. Your FPCs will be getting something shortly from us about what to do about their Hill visits that would normally take place during the mid-year meeting, but it'll now be sort of a little bit more flexible. But we'll be providing them with a whole list of things that we're looking for in future packages, including infrastructure and some more tax relief, all kinds of things. So stay tuned. We're out there still working for all of you. All right, and I know I saw lots of questions came in while I was talking.
Hey, Megan, let's use this opportunity to explain what the FPC is. So some of our folks here aren't necessarily tuned into the political things and how everything kind of shakes itself out from, say, our association to NAR and what happens on Capitol Hill. So could you give us a quick little explainer about that?
Sure. So your FPCs are your federal political coordinators. So there is a realtor in every congressional district across the country assigned to every member of Congress. So you have in Pennsylvania for every member of your congressional delegation, as well as every member of your Senate delegation has an FPC assigned to them, a federal political coordinator. And it's that person's job to have a personal relationship with their member of Congress. Often they're the realtor who sold them their home, or they went to high school with them, or they live in the house next door to them, something like that. They go to the same church. They often have a personal relationship with their member of Congress. And so it's their job to be sort of the key contact for that member of Congress and the realtor community. So when they do they are supposed to have regular meetings with their member of Congress, and in conjunction with our May legislative meetings, they often fly into Washington, D.C. to meet with their member of Congress. That's not happening this year because we're doing a virtual meeting, but they will be given some talking points on what to talk to their member of Congress during this time related to the situation that realtors are in and that housing markets are in and real estate markets in general are in.
So GPAR people, so we have Congressman Dwight Evans and we have Congressman Brendan Boyle. And if we go ahead and look at Congressman Evans, his contact for us is Bill Festa, and then Boyle is, Congressman Boyle is Jack Malloy. So we go ahead and we see the little intersection. You have Summer, our staff, interacts with Drew. Drew helps us out with those different Congress people as well as our FPCs, so that when we do Day on the Hill visits, that usually happen every single May. That's kind of like the connection that we have from our local association through the National Association to our elected representatives there on Capitol Hill. So it works really well. So like if something was to pop up and we need to go ahead and let Representative Evans know, hey, here's our position on this, Bill Festa, a GPAR member, would go ahead and advocate on our behalf. He would have that direct conduit to the congressman's office. So just trying to give you guys a little bit of context for how that works with DC to our association. So
just adding to that, Matt, one more thing is that we also have a third congressperson who's Congresswoman Mary Gay Scanlon. She represents Philadelphia, some parts of Philadelphia, and obviously neighboring counties. So she's also part of the Philly delegation. And we do not have a direct FPC from GPAR, but we have a neighboring association who has an FPC for Mary Gay Scanlon. But however, we also, when we go for the DC meetings, we meet all three representatives. Also, in terms of, we are working with our FPCs to get our federal reps to come on a virtual town hall with you. So stay tuned on that also.
So Megan, you saw in the chat that we have some questions in there. Do you want to read them off yourself, or do you need us to queue them up for you? Whatever works best.
I think I can do it. Okay, so we had a number of people asking about pandemic unemployment. So Summer said that that Pennsylvania has not yet updated your website to allow for independent contractors. So stick with it; they will get there. It's just taking some states a little bit longer. So if you're having a hard time getting through that, that's why, if they're just not updated yet. So hopefully it will happen soon. How do independent contractors provide for proof of forgiveness? And is there a qualified expenditure list for your forgivable expenses under the PPP? Great question. Yes, I don't want to read it off now because it's like 13 different things. But if you go to that coronavirus, the SBA FAQ on our website, there is literally a list of what are the eligible uses for the different loan products and what you need to keep track of. The best we can tell you with how do you make sure it's forgiven is really good record keeping. So they haven't put out a form yet or anything like that on how you can track to make it forgiven. So just keep meticulous records on whatever you do with that money. That's the best we can tell you. But there is a list in our FAQ, in their SBA FAQ about exactly what are the qualified expenditures under the PPP. Are PPP loans better suited for realtors who have set themselves up as an LLC? So that's a really good question, and we are working on a flow chart. Part of our problem is our members are set up as so many different things. We have like sole proprietors, we have S Corps, we have LLCs, we have actual corps, we have people who are set up completely different ways. You wouldn't believe how many members have no idea how they're set up. They'll be like, I don't know what my business name is. I'll be like, how do you not know what your business name is? How do you file taxes? But it's true. Some of them don't know. We are working on a flow chart. We have hired actually outside attorneys because realtors are traditionally not eligible for unemployment. We don't actually have unemployment assistant benefits experts on our staff because it's not a program our members are eligible for. Why would we waste staff time on that? So we've hired an outside firm that has a lot more experience with that. And they're putting together a flow chart for us on like how different corporate entities or how different business structures can apply for the different loans. We hope to have that up by Monday. But I will tell you, I know of LLCs. I know of a couple LLCs that have successfully gotten both PPP and EIDL loans. So they should go for it all, honestly. The way that I've been telling people so far is if you have a need for this money, apply for it. You can always say you don't need the loan. You don't have to make any payments in the first 6 months, so you could repay it immediately if you decide you don't need it. I can tell you that if you do not have a business account with a bank, they will not accept your application for PPP. If you call and talk to your bank directly and speak to the loan officer, some will make an exception. That's a really good tip. So you also just have to call around. Again, it's a capacity issue at these banks. This is a brand new program for them. The EIDL was existing for SBA, but the PPP is new. And so these lenders are just being oversubscribed. And so they start with their existing clientele. It just kind of makes sense. That's what they're going to do. So just keep calling around, I know of a couple, I know of a few people. Most of the people I know that have successfully gotten a PPP loan did have a business relationship with a bank. So also tip to our realtors, when all this is over, make sure you have a relationship with the bank. Open some kind of business account there. It's crazy if you don't have one. So plan for the future and get one. But if you don't have one now, they're just going to have to keep calling around until you find a bank that might be willing to make an exception or have some kind of capacity. If you withdrew from your IRA, can you pay it back in addition to the maximum contribution? Yes, you can. And there's more information about how to do that in our overall FAQ, coronavirus FAQ, on how you can pay back your, if you withdraw from your IRA. I already applied for unemployment because I received any blah, 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 saying I was eligible. And yeah. So I know the application's not available yet. That is a problem we're having across the country. Some states are just not up to speed. They will get there. Unemployment, is it applied in the state where you work or the state where you live? That is a really good question. I'm going to have to, I actually know we have answered that one. We have an unemployment FAQ as well. And I know it's answered in there. I cannot remember right now. I'm looking to see if I can see it. I believe it is in the state where you work. So I know this is an issue we have here. I live in right outside of Washington, D.C., right? So we have a lot of realtors who live in D.C. but do their business in Virginia or Maryland. We're all like merged all together here. And so I know some parts of you all are probably like that with New Jersey and Pennsylvania. So I believe it's in the state that you work, but you know what I would do? I would apply to both and see what happens. If Pennsylvania isn't available yet, apply to New Jersey if you do business there. We are realtors filing Schedule C, but also have rental priors of Schedule E, all filed under Social Security number, no employees would be able to get anything for rental properties. Does that qualify? So yes, we think that does qualify. So you yourself can count as an employee for PPP. So again, you can't get unemployment insurance to pay yourself and get a PPP to pay yourself. You can't do that. But you could apply for a PPP to pay yourself if you are the only payroll. So I know a realtor in Georgia who just got her money over on Saturday. She applied for a PPP. Her only employees were herself and her husband, who are partners in their real estate business. They are their only employees, and they got a PPP to cover their own personal payroll. So you can do it like that. If you have rental properties and you manage those rental properties, and that's your business, you can absolutely apply for that in that way as well. Oh, all right. So Ming said, state where you work is better than state where you live. Excellent. Yes, Matthew asked if I would be willing to share the slide deck. I will be happy to do that. Drew can send it to you, or I can send it to you.
Perfect. Thank you.
I think that's all the questions. If I miss one, feel free to ping me.
I don't think there are any questions. It's already 3:40, and we just want to thank you, Megan and Drew. Not every day you get to hear Dr. Lawrence Yun and Megan Booth on the same day. It's unheard of, because we also, as a GAD, when we have a GAD meetings, Megan is one of those people everyone wants to hear. So thank you, Megan. Drew, it's always a pleasure to work with you. I know the DC meetings have been canceled, but we'll catch up to have a drink once everything is over. And Matt, if you want to say anything.
Yeah, so first off, guys, if you could drop any of your thoughts and comments in the chat. You can make it directly to me. So that way, if you have any scathing comments, I just see them. But I don't think so. I think Megan and Drew did a fabulous job running through all that stuff. And a lot of it is, as you guys can tell, it's very fluid. You know, you got this, that was a massive piece of legislation you got that came through just a short time ago without having all the infrastructure. So I think one of the things is, it was like, look, we got to get this through. We got to move it. And then we'll take care of some of the details later on as it unfolds. But the main thing was to enable getting the funds into an appropriate spot to allow for it to start moving and get dispersed. So a lot of patience, I think I've heard that a couple of times, was being patient, being persistent. You guys are realtors. That's part of the gig, right? You got to keep pushing forward. When obstacles are in front of you, you either bust through them, go over top of them, or dig your hole underneath of them, right? You just figure it out, right? So that's part of the role. You're used to that. The hardest part now is you're doing it for yourself and not necessarily for your client. So if you're not going to champion for yourself, who is? So with that, I want to remind you guys, tomorrow, 10 o'clock in the morning, Lee Brown, exclusively for our members. We want you guys to get in. It's an hour session. It's a part of a 3-part series webinar. Tomorrow's the first one, and then on each of the next 2 Thursdays after that. Time well spent. She's a really great presenter. You're going to get some good nuggets out of that. Megan's shaking her head. Any testimonials there? Go ahead. Give us a testimonial. We love testimonials.
Oh, she's great. She's so entertaining and informative. She's excellent. You will get a lot out of that presentation. And I've seen her do a couple things on some of these coronavirus and how she's getting through it, and she's excellent. So I highly recommend her.
So folks, spread the word to your fellow GPAR members. We want to see the space filled up. Again, time well spent. You're probably not going anywhere tomorrow morning at 10 o'clock, I'm assuming. So captive audience, do it. We'd love to see you in the room. Again, fill in the chats. And then we have the L&I commissioner tomorrow afternoon. So again, great opportunity to have access. You can field, he's going to be fielding questions. Friday, we're going to have the legislative update from PAR. So we're going to have Alex with us. And then what do we do to close out the whole week? Because it's been a rough work week. We're going to have the virtual happy hour in the listing room where you bring your own little beverage. We raise a toast at 7 o'clock Friday night. So we'd love to see you guys all there. So Drew, you have anything to add to close us out here?
No, that'll do it from me. I greatly appreciate the invitation, Matt and Summer, to be here. Glad we could bring Megan along to explain the details of you mentioned a massive piece of legislation, the largest piece of legislation actually in history. So no kidding that it was large, and the details are still being worked out. So I think Megan's piece of guidance on PPP, being prepared, but also being patient and persistent, is going to be key here. Even as we get further down this road and maybe there's an injection of more money into these programs, there still will be kinks to be ironed out, as is always the case with massive federal legislation. So folks, take care, stay safe, stay healthy. That maybe is the most important part of all of this. And I have no doubt we will be on the other side of this here before long, and I'll be able to visit hopefully in person and see you all there in person.
Yep.
All right, sounds good. Thanks everyone. Have
Thank
a great
you,
afternoon. Take care.
Take care. Thanks.